Hi there traders, and welcome to the Keyzone Traders Trade of the Month for July. Now, as we've mentioned recently in some of our recent videos, the summer months can be particularly tricky trading. They offer much fewer opportunities and can offer trickier trading conditions in the financial markets. However, we did get a couple of good trades this month, and the one that we're going to look at is a 15-minute signal that we took on the FTSE earlier on in the month. So with that being said, let's go jump in the charts. Hi there traders, so this was a trade that we took on the FTSE, it's a 15-minute chart. It's got all of the same components that we normally talk about with the liquidity grabs and those stop hunting and with the overall context of the market, etc. So we're just going to go through it and show you those things again, and hopefully it's just reaffirming that these sorts of things happen over and over and over again in the markets. And if we actually have the patience, we know that these sorts of things happen. If we have the patience to wait for the right signals, we can really profit from them. So this was the setup that we had. You can see here we had this. This was based on some news that came out. A big spike down. We then rallied. You can see we actually just took out the highs there. You can see just here we've got that liquidity grab from the upside. Although that said, this was not one that I would take as it was against the overall context of the market, and you can see it's not really a reversal on that 15-minute chart. This blue line here, this is the moving average. This is something that I do on my trading view charts. It's the moving average on the 15-minute chart. It's the 4-hour 20 EMA. So it's the higher time frame 20 moving average, so that I can see quite clearly where the higher time frame context is. Now, when I'm actually making a trading decision, I do switch to that 4-hour time frame just to double check that it does look right from that higher time frame context. But it's certainly, having it plotted can give me a really good idea of whether or not the higher time frame context is with that market. So as you can see, this clearly moving up. We've clearly had acceptance and moving above that moving average there, and we pulled back and connected with that moving average. So that's another plus to the trade. So from this initial spike down, as soon as we started moving up here, if anyone had got long from this spike down, they would have their stops below that spike. They would have their stops in that area. And actually, if I show you the zone of support that we had for that day. If you give me 1 second, I'll show you that zone of support that we had for that day as well. So as you can see, this was, you look at the bottom there, you can see down here, this is Monday the 3rd of July. This was the trading day. So on Monday the 3rd of July, so it was the first trading day of the month, so it can lend itself better to longs as well. But you can see here in the commentary, we said sustained breaks below the support at 75.13 to 75.19. I could see it's back into an unclean and choppy area of the market, but we had support at 75.13 to 75.19. So if we just plot that on here as well, you'll be able to see what we was looking at as well. So 75.13 to 75.19, that was your zone of support. And you can see that we had this distinct level here for the liquidity grab, and you can see we actually took that liquidity grab. We took that liquidity out. We traded below that level, below that swing low. Took that liquidity. It was from the support zone that we had. Therefore, it was a nice close back above the level, and therefore we had a nice signal. So we entered at 75.24. Just above the candle. The low of the candle was at 75.13, so we had a stop at 75.12, just below that candle. And we just went for a 1-to-1. Because this move down was quite impulsive, we just went for a 1-to-1 target at 75.36 there. So as you can see, we then got triggered into the trade straight away. And the market moved quite nicely to its target. It had this little bit of potential continuation of the 8 moving average here. Now this is something just from a bit of a more advanced management sort of side of things. If this had started breaking down and then you got this continuation, you can actually cut for a smaller loss rather than taking the full hit. Whether you want to be really tight and actually take move stop to entry here, or whether you want to wait and see the next candle, and if that continues momentum down and then just reduce your loss, that's completely up to you. But we actually didn't break down. You can see we got a nice, then another bullish candle, and then it went and hit a target. That was the trade basically. It was a nice target. It was up into the moving averages of the 15-minute chart as well, just in case you got a continuation of this impulsive move down here. So the target was nice, 1-to-1, and it was over pretty quickly within 1, 2, 3, 4 candles. So yeah, like I say, it's got all of those components. It's from a valid area of support that we'd identified before the market even opened. And we had taken that liquidity of that previous swing low, when we know that a lot of retail traders, a lot of people will have had their stops there, got taken out of the market only for the market to reverse, and that is our signal to get in. So I hope you found this useful. Please let me know, or if you've got any questions, please comment in the boxes below. I'd be more than happy to engage and answer any questions. I hope you found this video useful, and I'll speak to you soon. Cheers.